Welcome to the Market Rant. My name is Joe Favi alongside my co-host Tom Canfield. I'm excited for this show. We got two awesome guests with us. Let me introduce our first guest is trader extraordinaire, one of the stars of IBD Live, product manager at MarketSmith, one of the star of the Investors.com podcast. Men want to be him. Women want to be with him. Trader extraordinaire.
Wait, are we talking about? Wait,
we're talking about you, dude.
We're talking about me.
Right, we're talking about you.
Irusha Peiris, thank you for being here, Irusha.
Great to be here, Joe. Great to be here, Tom.
Awesome. And
when he walks down the street, the women just flock. It is
the other way.
It's amazing.
It's like parting the seas.
This is going to be great. Our other special guest, one of the greatest portfolio managers out there, in my opinion, one of the most under the radar, awesome portfolio managers, who has probably forgot more stuff than I'll ever know in my life. Phenomenal stock picker, market historian. You might also recognize him from the movie The Big Lebowski for his role in that movie.
The dude who abides.
The one and only Mike Webster. Mike, thank you for being with us.
Hey, thanks for having me.
Awesome, guys. Awesome. All right. So I'm excited for this. Tom, I don't know if you want to start off with just sort of some questions, market process, thoughts on the market. You go ahead and fire up.
Why the fuck do I have to start? Seriously.
Dude, you're the star of the show. You're
the star. I'm the co-host.
Everyone's here because they want to see how many F-bombs you.
That's true.
I was going to try and keep it clean for you guys, and so
Zoom has an F-bomb limit, and I set it to 300, so we're good.
Right, yeah. But Fahmy, I already told you I'm baked from today. I had to recover from yesterday. I didn't want to have to talk, and the first thing you say is, Tom, what do you why don't you start us off?
I'm just trying to include you in here. All right, so guys, I want to know.
So we'll balance it out because
I got to. All right, let's jump in. Let's jump in. I got. We're all arguing. Let's calm down. Deep breath. Okay, I'm opening up a beer. I got the good stuff. I got a million questions. I want to start off with process. I know a lot of people want to know this and ask questions, and I know can be a 3-hour conversation. Just sort of. Let's start with you, Mike. What is your sort of daily, weekly process when you're approaching the markets? Because you do amazing analysis, and people want to know what your process is.
Well, it's been the same for, 20 years now. The bulk of it I do over the weekend. So, I'll run tons and tons of screens. I basically look at everything, things I'm not going to trade, and it gives me a feel for the market. And so that's a starting place. But midweek, you still have to do a ton of screening. And after we do our show in the morning, I screen about 500 stocks, and I go through and create a couple lists that we share with people. And it's really, there's no one screen. Everyone's looking for that holy grail screen, and it doesn't exist. So you have, I've got probably 40, 50 screens essentially that are going into one filter that I'm looking at. So the Growth 250, which I created way back when, that has 30 screens in it. So that's a starting place. Plus I have a bunch of other things, stocks that I'm not going to trade, but I want to look at, like Boeing, for example. We're not going to trade that. You guys might trade it. We can't, because that's not in our wheelhouse. That's not our style.
What do you mean, you guys? What do you mean, you people?
you too.
Like you please.
What do you mean, you people?
Yeah.
You too. If if you want to make like 100%. No. If you want to make 100% in a week.
Might be. On your Robinhood accounts, it's really cute what you're doing. I might look at Boeing, but
get your fractional shares.
That's not at all what I meant. You guys know that. And you're going to get me to cuss, but we're both IBD employees, so we can't.
Our goal is to get you guys to cuss.
Now the game is on.
It's not going to happen. So
I agree with you on the weekend stuff. My question is, do you screen every night, or you're screening during the day, or both?
Oh yeah, during the day, like constantly. While we're doing our show, I'm screening. Second that it's over, I'm screening. Plus, I have a universe list. So, the universe list is now something that, and we're not here to plug anything, but I'm just ask the question.
I don't care.
We have this list that we give out to the people that watch the show, and that's essentially my watch list. And I'm adding to it and subtracting it as soon as the show is over.
Really quick, so people who don't know what the show, it's IBD Live. Tell them just, quick 30 seconds what you guys do in that show.
Irusha, you tell them.
Arusha, go ahead.
And we're not here to plug anything.
I know you're not, but we're talking about.
We're not here to plug anything, but let's talk about what we do.
No, I mean,
Like 2 minutes into it, we've talked about IBD Live.
It's like having an
talked
actor
about
on.
250.
It's like having an actor on.
Just own it. Just
Okay.
own it.
All right.
There it is.
There you
Plug
go.
the
Pour
shit
yourself out.
There
Why
we
not?
go.
I mean, it's like having an actor on Jimmy Kimmel and like you can't talk about the movie you're plugging.
Yeah,
So
we're not.
Arusha,
But
so
the truth
about-
is, neither of us get a penny for the show. So we do it because we love it and we love helping
okay.
people, just like you guys
Sounds
love
like
what
us.
you're doing.
Yeah.
And we don't have agents, so we don't get paid for it.
Well, we do.
Arusha,
Actually, Fami's got an agent.
Tell
None
us-
of us do, though.
Tell us what IBD Live, 30 seconds, what it's all about.
Yeah, IBD Live for the first hour of every trading day. 4 of us will get on, and we're going to watch the markets with you. We're going to see if any stocks are breaking out, setting up, or look like a couple of Wednesdays ago when the markets were falling apart. Everyone got to see how we were panicking with everyone else, but not necessarily panicking. Honestly, I listen to it every day. I'm only on.
Does anyone get scared?
we weren't
Does anyone
panicking.
cry? Does anyone like run out the building? Is
No,
anyone
we hide it. We hide it inside pretty well. You know, we mask
Okay.
our feelings pretty well. But yeah, so you get to see how we're reacting. And really, what we've heard is, you know, it's kind of the same approach, regardless if things are going up or down. You're trying to be as methodical as possible.
Okay.
Well, and Joe, I think it's important that we just, for the people that are watching this podcast, that they kind of understand, you know, a little bit about the core of IBD and your all's company, and why Joe and I consider you guys such special guests. You know, it's IBD, it's MarketSmith, it's all from the canceling methodology that was created by William O'Neill back in what, you guys tell me, the 50s? I don't know.
It was
what
the early 60s
Okay.
is really when it kind of started. Yeah.
And it is the Bible for both Joe and I in terms of how we see the market. It's how we have always viewed the market. It's everything that Joe talks about on his videos that he's doing, everything I've ever done as a swing trader, and even now as a day trader. It stems from daily use of this product, and it stems from the whole concept that they represent.
Right.
So
And
that's why we're tied into these guys.
Yeah,
so
no,
that you
that's why
understand the
I don't
connection
look
of
at this
why.
I agree 100%. I don't look at this as a plug. We're actually telling you what we're using and what I've been using since it was the printed daily graphs for, you know, we used to get them in the mail. So it's real.
Those are
shit
great,
that we're
man.
using.
Didn't you like the prints?
I used
missed
to
those
love
books.
that. I used to flip through those pages, and it was.
My grandfather used to get those.
My
Those
great grandfather.
Joe,
All right,
Joe, did
you
you know
win.
his grandfather?
What? No. So look,
His
you know,
grandfather and I were 2 years apart in high school, just so you know. We were 2 years apart. All right, so this is what I'm going to do. I'm going to
the whole Bill thing, let's just like summarize it if people don't even know who Bill is.
Go ahead.
He approached the market in a way that we all follow in the building, whether it's IBD where we work or William O'Neill where I used to work or our sister companies, that we just objectively look at the market and just say, okay, you know, what really happened, not what do you think should happen, you know. And it's a lot of what you guys talk about is just objectively and being intellectually honest, which is so hard for so many people to do, and change your mind when the market changes. And that's what I learned from Bill. You know, I used to call him every night for like 15 years on Sunday night with stocks for us to put on our institutional list. And some nights he would just be so bearish. I mean, just the world is coming to an end. You know, let's look for avoid stocks, but they're short stocks, and let's take everything off of our buy list. And then by Tuesday, something happened in the market, and he's switching gears. He's calling me up, Mike. You know, we need more stocks on the list. And then I'm searching, scrounging for names, and he's just that flexible. And he's taught all of us, everyone in the building, it just has that mindset of just switch as the market moves, rather than what a lot of Wall Street does is they plant their flag and they're like, I almost cussed. They plant their flag. And
almost. We almost got a
Exactly.
we almost got an S-bomb or something. So Tom and I have talked about, like, one of our favorite phrases is don't focus on what you think the market should be doing. Focus on what it's actually doing. Mm-hmm. So I think that's kind of what you're saying. And the other one is Stanley Druckenmiller's line of one of his greatest strengths is his ability to change his mind quickly.
Right.
And I think that's what you're getting at, Mike, is you have to be flexible. One, because the markets are moving quickly. And two, I think, unfortunately, because of social media, or because if you have a blog and everyone, and my grandmother has a blog, and they say, okay, I'm bearish. And like you said, on a Sunday, and then something happens, their ego's too big to switch their mind by a Tuesday. But I really don't care. You have to be able to change your mind.
Absolutely. And that's what, it was so wonderful to watch him for all those years do that in real time, because in our institutional sales force, who are having to talk to the Contras of the world and the T Rowe Prices of the world, and they would get flack from a lot of, not from the Contra, but from a lot of the general mutual funds, not anyone in particular, that hey, you're switching. Why did you say this, on Monday? Now you're saying this on Wednesday. And they really came back after a while, after they got it, of, wow, this is great to have this perspective of, changing on a dime versus just saying, oh, I liked it at 100. Now it's at 90. I like it more. Now it's at 70. I like it even more, which a lot of people do. And so it takes a little while of getting used to, but then they come back and and some of our best clients have been with us for decades and decades.
That's awesome. I'm going to pull up just a random chart because, Apple's an asset class by itself, so I might as well pull it up. My question to you, Irusha, is when you pull up a chart, being, the product manager at MarketSmith, when you pull up a chart, what are the first 2 or 3 things on MarketSmith that you're immediately looking at?
I'm looking at the price and volume action first and foremost, right? Because you want to see.
So you're looking like the chart pattern of
exactly
like uptrend, base, all that stuff that it's being built. I'm sorry for my gross lines, but
it's pretty good.
So that's what you're looking at.
I'm looking, and really for me, and you're going to get different answers from whoever you talk with, but I like starting out with the weekly chart first.
Okay, that's interesting. So you're going right to the weekly to get a bigger picture.
Exactly. It just gives a longer term perspective of the chart where it is. And so I'm looking, and the first question that I'm asking myself is, and this is, what Mike's talking about, going through hundreds and hundreds of charts. You want to become efficient at going through tons of charts in a short amount of time, because that's how you stay on top of the market. But the first question I'm asking, just looking at that price and volume action, is this stock buyable or going to be buyable in the next few weeks? And if it is, then I'm going to add it to a smaller list. If it's not, okay, let's just keep moving on. So I want to try to narrow down, like the Growth 250. The Growth 250 is the first list I'll go through on the weekend. I want to take out all the gems out of the Growth 250 that could be actionable in the next couple of weeks, put it in a smaller list, so now I can spend more time looking at the fundamentals on the left-hand side.
If it's near a buy point, that's the first thing you're looking for.
Because you want to spend most of the times on the ones that you have a chance getting into in the near future.
So it literally is the graph and the chart before all the other awesome data on here.
Absolutely.
Same with you,
and that
Mike,
took me years to realize.
Yeah, without a doubt, because that's how you get a feel for the market, is looking at as many charts as possible. And if you get stuck on one, let's say you're looking at Apple, right? And I agree with it. You start with a weekly. If you don't know the stock, you actually start with a monthly to get the character of the stock. But let's say, we all know Apple.
Looking at a monthly, okay.
Yeah. So when you're looking at this, what you're saying is, okay, what is the character? Has this been, a dog forever? Like, let's pull up GE real quick, just as a comparison. That was, you guys remember back in the 90s that was one of the key stocks, and it's just been terrible ever since.
Yeah, I'll go back and look at this so this is 1980 to 2000 GE.
Yeah, it was like an Apple, right?
Was the blue chip stock of the 80s and 90s. One of them,
Yeah. So that's the first thing that you do, and that's when I would give a stock to Bill, if he didn't know the stock, he would go to a monthly chart, and then right after that, even before a weekly, he would look at the sponsorship and see, who's in there. Do you have the best people out there, like the Fidelities or the T Rows or the MFS Growth or
Okay.
Lord Abbott, all the great people. That's another thing. Then you're looking and saying, well, where are you? Like, this is a piece of junk, right? You're underneath the 200-day. You're underneath, 40 weeks since it's a weekly. You're bouncing up. You're under $10. So we're just not going to play. That 200-day. That's the black line there.
Right.
And
No
as a
touchy.
general, exactly, no touchy. I like
No
that.
touchy.
So a lot. I mean, this gets to one of my first questions, which I know that, but the answer, it's more, a lot of people are obsessed with cheap stocks because they think of it as, I got to be King Kong and own a lot of shares.
Yeah.
And, we all, come from the same sort of blueprint, but can you explain, let's say you have $5,000 and your goal is to turn it into $6,000. What do you care if you're buying 2 shares of a $2,500 stock or, whatever, 1,000 shares of a $5 stock? Your goal is to turn that into 6,000. But people have this obsession with, I got to own so many shares, and that's why they're obsessed with low price stocks.
They just, don't get it. And at first, when you go through a learning,
every Robin Hood trader just turned off this podcast.
95% of our viewers just gave you
but who cares?
No, dude, I'm on with you guys. I'm just
right.
I'm just telling the truth. Look, that you guys tell the truth and curse. I'll tell the truth and not curse. How about that?
Perfect.
Way to be above it.
You want to see, your account grow from let's say 10,000 to 12,000. So you got a 20% gain. Think of everything in percentage terms. So who cares if you have to buy a fractional share of Amazon to do it? There's nothing wrong with that. It is not embarrassing. That all came back from back in the day. You guys, when we all started, you had the round lots where you had to buy things in groups of 100, or your commission would go higher. You get the odd lot commission thing going on there. So everyone wanted to trade in.
What are you, 90? I forgot about that.
Yeah, so you don't remember? Dude, I used to pay so much commission.
Odd lots. Yes, you would pay more for odd lots. I forgot about that.
You mean they didn't always trade in decimals?
No, and they were teenies.
There wasn't always just a penny bid offer spread? No?
Yes. No. Wow, I remember when that changed.
Fractions? What are you talking about?
I guess I'm old. Yeah, there were quarters.
I remember teenies and eights.
Yeah,
I remember,
Yeah. So anyways, to make a long story short, there's something to be said for quality, and that's price. And we'll probably talk about Bill a lot. Back in 15 years ago, he had come up with this simple idea for a list that he would get over the weekend. Before the show, we were talking about printed books, that he would get a printed book with just the highest price stocks in the market. And this is back when stocks were still splitting. Yeah, because he was one of the first to just clue in that the quality stocks, and that was, you remember Priceline was one of the first high price stocks.
Yeah.
Of course, you had Berkshire. That's a special situation. But yeah, so it's quality. So I like to, if it's over 100, that's good. If it's under 100, I'm going to investigate it a little bit more.
Yeah, actually, that's funny.
This is the monthly price line that used to be $10 and now is 2,000 or close to it.
So ridiculous. Yeah, the $100 level is that's a big level for me too. If I like to focus on stocks over 100. Now it's funny because that really narrowed it down. Now it seems like so many stocks are over 100, and so you almost have to raise it if it's over 300. Maybe because as we saw with Amazon, it can go from 300-400 up to 2,000. In a short amount of time.
So besides the chart, really quick, because I'll stop sharing this in a second. When you're looking at, I'm pulling up Apple. What else after the chart? What's the next one? Either one of you guys can answer. What's the next thing you're looking at?
The weekly data. If you go over to
weekly, okay.
Yeah, in the left side. So because that has the fundamentals.
I just have this shrunk, but it's down here on the bottom. There's 8 quarters, right?
Yeah. Okay. So that look, I like Apple a lot. I think is one of the best companies, around, but those are mediocre growth numbers. And that just comes with a law of large numbers.
Again, you just offended the entire, no kidding. The largest.
Who can I not offend?
The largest
AC/DC fans are the only ones that are still with me.
The largest, held stock or what, most widely held. Anyway, I'm just giving you a hard time, but go ahead. So you look at the weekly.
Yeah, you're looking at the quarterly numbers. You're looking at the annual numbers, which on this one is impressive. Up in the top right, where it starts with the 2013 year, top left. I'm
Top
still
left.
learning my left from right.
Oh,
So
here. This,
that,
you're looking at that as well. Okay.
Oh, in a big way. So, you want at least 3 years of increasing earnings. That's kind of a standard Can Slim, thing. The more in a row that are increasing each year, the better. And if you have a decrease, it's a defect. And what I like to do with each stock is just rate it. And you start by looking for defects and start at an A and, bring it down and back up depending on what you see.
Okay. And then on the daily chart, relative strength, I know.
Yeah, relative strength is the third one, I would say.
O'Neill,
but I would look on the weekly first.
And it's a
relative
you guys
strength
are really
line.
hardcore.
Yeah.
I know Scott O'Neill talked about weeklies a lot, and he influenced me a lot with weeklies.
It's been drilled into our heads.
You guys really look at it because, the average holding period used to be like 7 years. Now it's 7 seconds. So
it seems like it. Yeah.
So no one in their right mind looks at a weekly anymore. But so relative strength. I think O'Neill says in his book he won't touch anything 80 or below. Is that true?
Well, let me just answer. Mike can answer the 80, the 80 rating for relative strength. The one that and I was a long time customer like you guys before, and then I started working at IBD and MarketSmith. I learned during that time how important that relative strength line is. That relative strength line is gold.
The line is more important than the number.
Yes.
The line, the angle of the line. Scott St. Clair, is the one who really made that popular, at least for me.
Here.
Yes.
Okay.
If it's continuing to outperform the market, there's something going on there, and so you want to keep it on one of those short lists to really try to get in the next time it gives you that opportunity.
Okay. And then the 80 or 90, like my cutoff is about 90 personally, but whatever. Who the hell am I? But is 80 like a? Is it a hardcore number or?
No, that's kind of squishy. The higher the better. 87. Yeah, 87 is kind of where a lot of our studies that we did. I did this massive, gigantic study, and came up with 87. Bill picked 87 out randomly, not randomly, but that's how smart he is.
His intuition.
That he just realized over decades and decades of looking at these that 87 was the key, not 88, not 86. I did this massive computer-based study on every stock since 1962 and came up with the same figure. So if that clues you in on his genius, but that's an average.
87 or above is the sort of cutoff point.
And the higher the better. And I use the, it doesn't show up on the chart, but you can screen for it, is the 3-month RS. And I'll set that to 70 or higher.
Oh, okay. Okay. There's so much stuff I know you can screen.
Where would one find the 3-month RS?
What?
Where would one find the 3-month RS in MarketSmith? This is a new concept for me.
There are a couple of ways.
18 years later.
Well, you can screen for it.
For people that don't know, before we started recording, like they showed Tom and I shit we didn't even know existed on here.
Unbelievable.
I'm like, where are you? Well, it's like Batman. Where does he get all these
like
wonderful
a first grader.
It's
like, this is what happened.
I'm going to stop sharing for a second.
In the late 90s, right, we had the huge move up, and you had Qualcomm that had the biggest move in 1990.
Oh, yeah.
And then it came crashing down. And for the longest time, it still had a relative strength of 99 because that's over a 12-month period of time, right? And it just ranks it. It says versus every stock in the database, what is, how does it rank? And the top 1% get 99, the bottom get 1. Well, if you've run up 3,000% and you've come 70% off your highs, you're still up way more than everything else.
Right.
So I came up with a 3-month RS and a 6-month RS, and it's more exponentially weighted. So the most recent time frame, even in that 3-month, is more meaningful. But you don't want it too high because then the stock is going to be extended. So kind of the sweet spot is 70 for your screening.
Can I come up with a 2-month RS and beat you to it? Kind of like 8-minute abs and 7-minute abs. Can I come up with like 2 months and just beat you to it?
You guys are making this so hard.
No, that actually
So
makes sense from what
hard.
you're saying. And Qualcomm come crashing down, it's still up 1,000%.
Yeah, Webster looks at 800 charts a night. Like, who fucking does that?
He does it during the day.
It's a
While you're
space bar.
sleeping, he's looking at charts.
Yeah.
But the
Like,
cool
he's
thing
like,
is
get out of
the
here.
program.
It's like Rocky 3, you know, when Clubber Lang was, you know, working out in the basement, you know, and meanwhile Rocky's, you know, he was just hanging out, having some beers and stuff like that. What happened the first time those guys met? You know, Clubber Lang beat the crap out of him.
Yeah,
right?
there you go.
He almost swore. He almost
That,
swore.
that
see
counts.
Exactly like that.
He
Does that
That's
count?
a 4-letter word.
Oh yeah, that's right.
Yeah, I know.
I wouldn't want to be you.
Okay, but to be fair, what's cool about the product, though, not to be a shill here or anything, but is there's so many different within the overall arching philosophy. Like, I use the product completely different. I screen totally different. All the stuff that you guys are talking about, I'm sitting here going, I don't do that. I don't do that. I have 8 scans. I use those 8 scans that I tailored, and it ends up making a list of about 75 to 90 stocks that I set every week, and that's it. I will not look at another stock unless a stock breaks out. So I have a breakout scan that I look at 3 times a day to see if there's new ads, and that's the only thing that I do, and everything comes from those 90 stocks. And if those scans can't produce winners that can make me a living, then my scans have to get better. But I don't like looking at 400 to 600 stocks or constantly. It's just, I've scaled it down to such a refined. So I don't look at anything that's under the 50-day
Right.
moving
And
average.
while you said that, Webster's been screening and he found 3 stocks for tomorrow while
Right.
you're saying that. So,
But it's
No,
like,
I'm not.
he's like-
I turned off my
I'm
other
kidding.
monitor.
so it's just,
He's like,
it's like,
I don't want to listen to this. I just want to screen. I'm kidding.
Tom, you
but
talk
Tom,
about a very good concept there, though.
because
I use it differently too. I use it. Go ahead, Irusha.
I've referred to what I've done as it's kind of like CanSlim on steroids, because it's like, I don't want to see a stock that doesn't have at least 30% earnings in the last quarter. I don't want to see a stock that doesn't have at least 15% increase in sales. And then I've got other scans where it's like, I just want to see the stocks that have triple-digit earnings growth the last 2 quarters. Who are those companies? And I'll be damned if they're not the companies that are just blowing it out right now. And so you're
trading the absolute best.
And that's
years, I want the best of the best.
You're drafting. You're an NFL
the growth managers
NFL
are
owner
like
drafting
climbing over
only
each other
from
to get
the
stock.
SEC.
But that's a really
I don't give a
important
shit
concept.
about the rest of them.
Yeah, and that's perfect, because and this is what I tell a lot of people is you learn the larger concepts of CanSlim, then make it your own.
Right.
You have to fit it to your own personality. So even in-house, Mike and I trade completely differently. So sometimes we'll actually a lot of times we'll be in the same stocks. We just might be in at different times,
right?
Or just getting different points and things like that.
Or one's long and one's short.
that doesn't happen.
Usually it isn't. No, usually
I'm kidding.
But the thing is, you got to figure out a way to fit it to your personality and make it work for you. Yeah. So we're all completely different in house, and we're all studying the same system.
Yeah, no, it's a great.
That's what's really cool is you can tweak it and tailor it to fit.
Yeah, yours is laser focused on the absolute best, and you know what? You're starting with the absolute best you can find. I mean,
and I'm still using it as a day trader. I still use that list to be able to evaluate what's really going on in the market, because if those stocks are still going, the market's okay. I don't care what the indexes say. And if those stocks start to peter out, which typically happens before the market peters out.
Mm-hmm.
Yep.
It's always been the very best tell for me. So, and it's rarely ever led me astray. So and you do that over years. You just kind of formulate it. Now I don't change them at all.
Yeah.
And it's.
So
I think that's great, Tom, that you have that system down, because what it does is it gives you a unique list. And what I got from that was the knowing when the market is topping before you see it in the indexes themselves. And that's when the leading stocks start rolling or they start acting funny. And if you have just a unique list that you're looking at, whether that's your screens, the top 50 by market cap of the S&P 500 or the NASDAQ, you pick it. It doesn't matter. Yeah. Pick the same list of leading stocks, watch them, and that'll give you a clue. And I'll tell you, there were many times where, when we weren't sure about the market, Bill would have, just ask me, go through the leading stocks, tell me how many have completely topped. And then he would ask another PM that, and another PM, and then he would come back with the consensus that, okay, Mike thinks this, Charles thinks this, whoever, and then that would give us another sense of, a feel like what you're talking for. So that's very important.
So the leaders supposedly top 2 to 3 months before the market tops. Is that still sort of like a Qualcomm topped in January of 2000 before March, April? Is that like a consistent thing or no?
No,
I don't think so. I remember with my list, like going back to 2018, like in October of 2018, the market started to tank and it went, and everybody remembers that. And I was so thankful for this system because I watched all the stocks that I keep track of in September just starting to let go. The indexes just stayed, and every single one of the leaders was duck and run. And they were all failing. And all of a sudden I realized, shit, this isn't good. Because suddenly I had nothing to buy because nothing looked good anymore. Yet the markets were still climbing. And so I remember tweeting out at one point, like on September 29th, I said, I'm done. I'm in cash. And it was like October 2nd, bam, or whatever it was. And then it went straight down and it was unbelievable. But so it was the stocks failing prior to the market, the leaders failing prior to the indexes failing. It was it was best tell ever.
And Mike, so that whole 2 to 3 months. So I agree with Tom. They tend to fail before the market does. Is there any, based on your studies, like rough time frame or no?
No, well, it also depends. So if you think about the March of 2000, that was unique because you had the Qualcomm top right at the beginning, right at the very end of 99, the beginning of January, and that was the stock to trade during that time. And so that fell, and then you had and the market should have rolled at that point, but it didn't. It had one last squeeze in there. And that's what was, how you guys remember, in 98, 99.
But even Dell topped in February of 99, a full year before the market topped. And that was also a monster that split every year like Cisco.
And that's why people like the cheap stocks. Going back to that, is back in the day, there were the splits. You remember the services that they had where,
the split. I remember subscribing to the split report and playing run-ups into splits. Cisco and Dell would split every year like clockwork.
Yeah, but going to your question, no, that has changed, and that was unique with a calendar change, and then also the tail end of a bubble. And there was still a ton of money to be made from January to March 10th of that year. And if you remember that what happened is the NASDAQ fell, but they were still trying to support the Dow stocks and the S&P stocks and those didn't roll over until what it was like maybe August September of that year, because they were trying to do this rotation into them as they were just unloading all the tech.
Because the NASDAQ dropped like 37% in 15 days or something, and the S&P didn't even drop it like a third of that, right?
Well, but it also didn't run up with it either. I mean, it was true. That was during the time when the term bifurcated just absolutely drove me nuts, because they said it every single day. Bob Pisani would say that, we got ourselves a bifurcated market again today, folks. Like, fuck off. Well, it's like I hated that word.
Well, Bob Pisani, he has always been wrong about volume, the way he looks at it versus the four of us.
Volume's anemic today. That was his quote. Volume's anemic.
But it's like huge versus the prior day. And I don't know what he was using. But now that I see him on TV and he's got cool music posters behind him now, I'm a fan of him. But I didn't like him for 20 years.
Much more respect let me get a Zeppelin poster so Mike will like me.
But to answer your question, in 2007, it was about 5 days or so before the top. What was it, like the October 31st?
Halloween.
The Halloween.
If you
were starting to top.
If you weren't trading Google, Apple, or RIM, like why come to work for like 3 months? Because they just
Baidu,
those are the only ones going up.
Oh, that's right, Baidu.
That's right.
Yeah.
And then so they topped. So the whole point though is the leaders top, whether it's a few days or a few months, but keep an eye on the leaders to roll over before the market.
Well, leaders lead on the way up and they lead on the way down. Right. If I start seeing some of the stocks that have done so well, when they get crushed, a lot of times it might be on an earnings report or something like that, but they just get a few of them just get taken out. All of a sudden, a warning goes up and goes, they've taken out a few. Are there enough leaders to continue to move the market higher? Sometimes there are, but kind of like what Tom was talking about in 2018. things where I was doing okay, and all of a sudden, I think like Roku and Match, all of a sudden they just started getting clobbered.
Just imploded.
Yeah.
Tom's right about that. Yeah.
Wake up. Right.
And to add on to Tom being right,
Go
Tom,
ahead.
you'll like this because it's Tom being right.
It's really important for you guys to focus on that, I think.
Yeah, you were so right about not finding good merchandise. Like you can find junk, right? But not anything quality. You're like, oh, this $5 stock is moving, or this stock that has no earnings, no story, no monthly chart, no weekly chart, and it's set up. But you're right. The screens that you have, nothing's going to be there.
Right. It's just my screens don't allow me to see that stuff. And
the Growth through 50 is kind of like that, right?
Yeah,
where it'll expand and contract to a point.
Yep.
And I found that, you guys can correct me if I'm wrong, but it's like each cycle, first of all, each cycle the leaders are different. Not completely different, but the mix of who the leaders are and what the key growth sectors are that are leading change kind of from bull phase to bull phase and whatever. And I find that there's really only about 25 to 40 stocks that really matter. And everything else is periphery. But the core key leading stocks, there's really not more than 25 to 40 of them ever. And so that's when those fail, I know it's time to get out, at least the way that I've done it. I don't know how many stocks. I mean, I know you follow a lot more stocks than that to try and get a feel for the market. But at the end of the day, even like now, I mean, I could list 15 to 20 stocks that are really, really key that you can tell are really getting accumulated.
You're basically saying focus on the best merchandise and the leaders.
And it's when those fail that you go, okay, time to duck and run.
Yeah.
Right.
Yep.
So I have